Welcome back, YouTube. So we're going to take a look here at the price action because I believe I have a better example to kind of show the point I was making a couple days ago. I was talking about the pretty much the breaks that happen in a bull run and establishing the zones and excuse me, comparing it to some of the things that's happened in the past, right? So we're going to take a look here at Bitcoin first because we know this is typically where most of the capital is going, and that's kind of what shapes the market. So we have, and after the initial blow up from the consolidation zone, we used the 14-day, right? And there were periods where we had rapid growth, but because of the rapid growth, we talked about gaps and the levels that attract buyers that come in at those levels, whether that's at the peak or the bottom of the gap up, and whether or not there's going to be any liquidity there. So if you're going zone to zone and you're chasing that liquidity, when you have those rapid moves, there's typically either there's going to be trading off of some positive news, or there has to be an additional, or people coming into the market, fear of missing out, FOMO and stuff like that, to kind of have a continuation of that trend. Otherwise, you're going to have to grab more liquidity before you can ascend to the next level. Otherwise, you'll pretty much get into that battle of trading sideways and back and forth, which in my opinion, as far as for how I like to invest, I believe that is a good thing. But I have a proper example to kind of show you what I believe is happening right now. So if we take a look, if you come up and you have this rise here after the initial consolidation zone, and we kind of use the 14-day to chug along until you were able to grab enough liquidity and go to the next zone. So if you take a deeper look as far as what's happening here, you had, outside of the bigger movement, you had some bigger days here. Was this like the 15th of November? Had a decent rise there, and then you immediately gave those gains back up on the next day. And then you had some smaller price movement days, and then you had a big decline, and then you gained it back the next day, right? And so when people start seeing some of the bigger candles or the bigger moves, they start kind of freaking out. Oh my God, it's becoming volatile, and we could see a breakdown. That's not always the case. Typically what you're seeing is you'll see the bigger moves, and then you'll kind of see it consolidate, and the moves will be very small. And you'll have some price battles in there, because that's technically what's happening. You had the moves here trying to do a breakout, didn't have the liquidity, got a bigger rejection here. And then you came down to the 14-day, had some big moves, and you kind of it literally just calmed down, had very minimal moves for about a week. This is what I was telling you guys, I think it was last week, when I said you had these sideways, you have this rapid growth, and then you have some sideways action for like where it's battling, trying to grab liquidity. And typically that's going to last, 7 to 9 days based off of this current trend here before we start seeing some bigger price action. So we've seen a couple examples of this happening here, where it kind of came down and used the 14 days liquidity. And I know that, or really as like a safety net, but I know that this is happening right now, is where our candle closed yesterday. We were able to kind of shoot past it, but it literally came right back up to literally be spot on with the 14. And even today, day before, the same thing, and day after, excuse me, same thing. And even today, we're starting out roughly right where that liquidity line is. And I think that, the 14-day. And right now, I believe we're something similar to what was happening between the 11th and 13th of November. And so we get evidence here, because we do, you can say, oh, can it have the potential to, have that overshoot and come back down to those previous levels? It does, but at the same time, the question is, will it stay? Because you have, we still have those two major catalysts coming out. I don't believe anyone right now. There are some people that are trying to, swing trade Bitcoin and stuff like that. But I think for the most part, the people that are coming into the market right now, they are, even if they're not necessarily long term, I believe that they're long enough to hold until like the halving or the ETF that's coming out. So just going to keep that in mind as far as for the tone of the market and money flowing in and out of the market. I believe that this will kind of set the tone for what's happening with some of the other coins. So let's take a look here for Doge. And really the same thing, what we're seeing here. We had, this is the first 2 consecutive red days we've had of this entire trend. So this is certainly what I was saying, not this entire trend, but since we grab liquidity from the 7 cent mark. This is the first 2 consecutive days we've had red days. So we've pretty much using like the same strategies I was saying down here with Bitcoin, which was using a 14-day for like a trampoline or for support before grabbing that additional liquidity. This is what I was saying, that in order to stay in this zone, we need to have liquidity, and ideally you'd want to build out a floor here. This is what we want to do in this range, because this is a wide zone. I mean, the zones get wider as they go up. This is a much bigger zone here. What you want to do is build out these floors at a certain price point. So it doesn't necessarily have to be right on the line, like going to like the next zone, or at 11 cent needs to build out a floor right on the head. That only works psychologically. It's fun, but that's not how charts work. It will build out the zone wherever the liquidity is. So if we are able to build out some sideways action here in this zone, this will be ideal. Right, we had very minimal price movement, slightly lower for the previous day, but the bigger day we certainly had a bigger push down, more than we had a rally from the upside from the 14-day. So this is really good here that we literally pushed off on the 2 red days. We pushed off of the 14-day. So that's really great here as far as for the using the theory saying that, okay, the 14-day is holding up the coin like Bitcoin. That is some pretty convincing evidence that I'm seeing here. Now, this candle is it's green, and if we're using the 14-day as support, then that gives us the opportunity here, because it's tightening to this actual zone here. So that gives us the opportunity to close back up in this zone and literally start building out that line that we were talking about. Because what's going to happen here is this. Right now, it's aggressive because it's obviously a lagging indicator. And what we're going to see is a flattening, right? And this will be ideal. Now, if this is where we're going to rest at the new higher high, you'll see this line flatten somewhere along here, somewhere at the top of this zone or into it. And you'll see the price action kind of chug along this 14-day and until the next liquidity grab. So that would be ideal here, because you want these kinds of breaks, because this Doge has been, and I think people kind of get concerned. You have like a red day or two red days. They'll say, "Oh, it's a rug pull, it's a trap, it's a institutions and stuff like that." Doge. If you look at Doge, Bitcoin, or most of these coins, look at them on like a 30-day. They've been on an absolute tear, and you can't say, okay, well, the bull run typically lasts for a year and a half or whatever, and you expect every day to be a green day, expect it to go up. That's foolish, really. And you have to have opportunities in there to, really add, to your position and sell. People are going to take profits. Things are going to happen. It's just you have to kind of leave that room in there and not have that thinking, especially going into the next cycle, if you want to capitalize off of it. So we're going to kind of see where this candle closes and where it plays out. But I believe that unless we break below this right now, the 14 days acting as a safety net. So unless we get some evidence that it's going to break below it, I don't have a reason to say that it will. Because even if it does, we have we have 2 tests here, 2.5, but I'll just say 2 at around 873, but that will require us to fall well below the 14. So we'll just use the 14 for now, because that's where we've gotten 2 really so far. I know the candle's still early. We'll see where this closes. 3, we're about to have 3 rejections off of the 14. So we're going to say that is currently what's supporting the coin here. So we'll use that. I checked shorts earlier. For Doge, there was 0 on the day. Yeah, so no movement. And I think Bitcoin, they were actually down about 20%, 18.85 last I checked. Oh, no, they're up now. Okay, wow. I just posted on Twitter like maybe 10, 15 minutes ago, and they were down, but it looks like they're taking a position here. So we'll see, because they're definitely trying to get it to go a little lower here, but they're not being aggressive, especially compared to if you look at a few months ago. So it's like some people are betting that it kind of goes down, but that's That's certainly not the tone of the market. I'll say that. Let's take a look here at Ethereum, see if there's any outliers. Yeah, same thing, really hugging on to the 14. We'll see, not much. Yeah, the 14 really, but really bounced off of previous rejection levels at around 21.38. You have about 3 tests there. So yeah, not 4 tests really. So that 21.38 mark for Ethereum really came through. So and it's closing at the 14. So you're having that price action where it gets rejected off of the 21.38, but the candle is actually closing at the 14. So similar to what we're seeing with Doge and Bitcoin. So that is in alignment with what we're thinking. So ultimately, they are doing pretty much what happens is when you wrap up, you go on a tear and you're looking at the period. If we're using the analogy saying that the coin is going to like rest and stuff like that, what you're doing is looking for liquidity. So that's a liquidity search. Where are the investors comfortable coming in? Where are they going to buy at the 14? Are they using they say, are they going to buy at the top of this zone? Where is that liquidity going to come in? Do they want it down here? And are they more comfortable buying it around 8 cents? So like what happened here, like when it was at 8.70, where was the liquidity? Where was the liquidity to grab to go on the next run? And it was about a penny lower at 7.09. So about a penny and a half lower at 7.09. Went down there, boom, everything was okay. So technically that is the question for here. Where is that liquidity going to come in at? So far, people are coming in here, but will that be enough? Because you can have, even with the sideways action, you can have very minimal trades and people just holding. That's typically what you'll see when those buys and sells start canceling out, and you'll get that sideways action. So, and then if it's not going to break in, then people will say, okay, well, I'll just take my position here because we've established this more. So I'll go ahead and buy because we may not get that breakdown, and I don't want to miss out on the next tear. So this will kind of use as a zone if we were to struggle at the next liquidity level. So right now, I don't believe there's enough evidence for that here. So you may have a combination of waiting. So this is what I meant by having like those days where we have that the trending sideways. We've been talking about that in the last couple of videos. So I believe that can kind of fulfill itself. And we'll just ultimately see where these candles are going to close. So with that, that is my update on price action here, the continuation of the bull run break. So let me know your thoughts or comments in the comment section. I appreciate all of you. Thank you to all our new subscribers. I appreciate you guys. Thank you guys for tuning in, liking the video, and sharing it. I appreciate all of you, and I will see you guys in the next video.